Hey, welcome back to YT Finance, and this is the channel where I went to business school so you didn't need to, and today we are talking about the top 7 best Warren Buffett stocks to buy and hold right now for the next decade. So if you want to copy one of the arguably best investors of all time and his top stock holdings, this is the video for you. For more videos on the best stocks to buy on the stock market, remember to go and smash that like button right now, comment your thoughts down below, subscribe if you are new, and without further ado, I say let's get right into today's stories. So let's start off with our first company, which he is a huge fan of, which is Coca-Cola, ticker symbol KO. Coca-Cola is one of the largest beverage companies in the entire world, and Warren Buffett is a huge fan of this company. Right now, the share price for KO stock is around $56, while professionals believe the company should be worth anywhere between $59 and $76 over the next 12 months. Warren Buffett is so into this company that supposedly he drinks 5 cans of Coca-Cola each day, and he has been known for bringing Coca-Cola products on TV and drinking Coca-Cola during his various press conferences and various interviews, particularly in regards to his latest moves at Berkshire Hathaway. His holding company, Berkshire Hathaway, actually owns 400 million shares of Coca-Cola, and Warren Buffett says he's not looking to sell shares anytime soon, which means that Coca-Cola is not only a fantastic long-term growth prospect, but it also gives investors a very good dividend yield of 3.08, which is absolutely phenomenal, particularly for a company as big and as valuable as Coca-Cola. Coca-Cola is clearly capable of continuing their top-of-the-line growth as they further infiltrate the overall global beverage market, and it's going to provide very good returns for investors. Now, although this company isn't set to surge anytime soon, it's going to provide investors stable growth over the long term, particularly over the next decade, on top of a very convenient dividend yield, which has not been reduced since 1963. So overall, Coca-Cola is a fantastic company to have in your portfolio, in both my opinion as well as Warren Buffett's opinion. The next company I want to talk about and point out to you that Warren Buffett absolutely loves and owns is Apple, ticker symbol AAPL, which is a giant technology company that does everything from software to hardware. They have their own iOS operating systems, and they sell phones, laptops, tablets, and a plethora of other different types of electronics. Apple as a whole is literally one of the best stocks on the entire stock market, and it's actually been one of the most successful stocks on the stock market over the past decades. It has given an annualized return each year to its investors of around 21.17% on an averaged basis, which absolutely crushes any of the other indexes or mutual funds on the stock market. Not to mention that in terms of singular stocks, Apple has been one of the top performers over the last decade, to where its value has nearly 7x'd or increased 7 times in that same time period. So buying and holding Apple shares for the next decade sounds like an exquisite idea, and that's exactly what Warren Buffett would say, considering that Warren Buffett's current portfolio is currently made up of 40% allocation to Apple. Now, this doesn't mean that he didn't practice proper risk management and that he invested billions and billions of dollars into Apple at first. The reason why this is 40% of his portfolio is because from his initial investment, it actually has grown into 40% of his portfolio, which is definitely fine by him and fine by me. He was still practicing a proper risk management when he did that. The current share price for AAPL is $143, while experts believe the company should be worth at minimum $136 and a maximum at $220. Also, it gives its investors a dividend yield of 0.63, which is honestly not that bad for such an aggressive growth stock such as Apple. I also want to bring to your attention that firms believe Apple shares can more than double in price over the next 5 years, which is absolutely insane. So you could easily 2x your money in a pretty short amount of time, to where the share price could reach $360, which is absolutely insane. And these same sources predict that Apple shares could rise to a price of $445 by 2032. So if you want to hold a very consistent long-term growth growth company, Apple is definitely and should be at the top of your list according to Warren Buffett. Moving on to our third stock, we're going to talk about American Express, ticker symbol AXP, which is a payment processing company. They are mainly known for their various credit cards that they give their consumers, and American Express is really in a unique position right now considering the current macroeconomic environment, because while we are in a recession, which is going to hamper and diminish various companies' financial results in terms of their quarterly reports, American Express is actually determined to fare pretty well during this economic downturn. Why? Well, it's because the customers of American Express products and services are actually more risk averse than the general public. So what do I mean by that? The people who use American Express have relatively high incomes and are very unlikely to default on any types of debt that they accrue, and I doubt that any of them would lose their jobs during a recession, considering that most of them are extremely white-collar jobs, which have positions that are extremely hard and rare to fill, so these people are definitely not going to lose their jobs during a recession. The current share price trades for $145, while on the spectrum, according to stock analysts, the company should be worth anywhere between $130 and $220 over the next year. The company also offers a dividend yield of 1.3, which is really not that bad, particularly for a growth company as amazing as American Express. Analysts who are currently covering the stock also anticipate that their revenue is going to explode up by around $6 billion over the next year, so that's clearly something to look further into, and of course Warren Buffett also is a big fan of this particular company. Up next we have Kroger, ticker symbol KR, which currently trades for $43, and stock experts think that this company could technically be considered undervalued, and the reason they think that is because it's currently trading at the lower end of their stock market price predictions and price targets, which range anywhere between $43 and $75 over the next 12 months. During a recession, people tend to try to make budgets, and they also start eating out less, which means they're going to start shopping at grocery stores more to get their meals. And that's why various people are opting to shop at Kroger in order to reduce the amount of money that they are spending on fast food and eating out at restaurants. Current economists believe that the strong cooking at home trend looks poised to continuously grow throughout the remainder of 2022 and in 2023 until the macroeconomic environment tends to stabilize. And this is really good news for not only Kroger, but a plethora of various grocery stores. Over the short term, Kroger looks to have a very positive business catalyst during this recession, and not only could it maintain your value in your portfolio during this time of macroeconomic uncertainty, but it could also grow your portfolio during this time while other stocks are falling. Not to mention, it also has great stock price appreciation to look forward to in the future, on top of a pretty strong dividend yield of 2.06. And I want to quote this particular part of the article. On top of Warren Buffett liking this company, I want to point out a catalyst that is coming up for this company that could cause the stock price to surge if it goes through, and I quote, Kroger's long-term outlook could be especially positive as Kroger is planning to buy its smaller rival Albertsons, ticker symbol ACI. The $24.6 billion purchase would create a grocery giant. As a result, if the deal is approved, the newly created company could rival Walmart, ticker symbol WMT, as the largest seller of groceries in the United States. So if Kroger and Albertsons combined into a mega company and Kroger acquires Albertsons, they could literally rival Walmart in terms of their grocery products, and that's definitely something to look into. And if that happens, the stock price could absolutely surge. The sky's the limit, particularly during this time of macroeconomic uncertainty. I also think this catalyst is very relevant because as certain companies decrease in their stock price, including Albertsons, it's going to be cheaper for Kroger to actually buy them out as Albertsons' stock price continues to decrease. So on top of that just being a phenomenal company, we can also look forward to a catalyst coming up for them. Next, we have another Warren Buffett favorite, which which is McKesson Corp, ticker symbol MCK, which trades at $360 per share, and that means it's currently fairly valued because it's trading between what analysts and professionals believe the company is worth, which is anywhere between $320 on the low end and $423 on the high end, plus a decent dividend of 0.54. This company has been one of Warren Buffett's favorites because it's been another long-term winner, and that's why Warren Buffett has chose this company to buy and hold on to for the long term. Its annualized return has averaged 15.6% over the last decade, and to put that into perspective, the average stock market index, such as the S&P 500, which is a fantastic stock market benchmark, grows anywhere between 8 to 10% year over year. So this company is absolutely crushing the overall stock market benchmark in terms of returns for investors, particularly over the last decade, which means that this company is phenomenal, and it's more than quadrupled its value in that same time frame. So this is an absolutely amazing growth company. McKesson is a pharmaceutical supply chain giant, and they mainly are known for managing supply chains for pharmaceutical companies and to make sure healthcare products are delivered on time in that supply chain. Perhaps most importantly for long-term dividend investors, McKesson has also increased their dividend by 15% from the original 47 cents to 54 cents per share. So that is absolutely amazing, and I'm super excited about this company over the long term because over the last decade it's had one heck of a run, and I'm very bullish on this company myself. And that leads us into our next company, which is DaVita, ticker symbol DVA, which trades at $90 per share, again trading at the lower end of the spectrum from what professionals believe this company should be trading at, which is a stock price target and or stock price predictions anywhere between $90 and $117. DaVita, ticker symbol DVA, has also performed better than the New York Stock Exchange, and it's appreciated in value at a modest 59% over that same time period. So although this is not a super growth stock, this is another stock very similar to Coca-Cola that will give you stable returns over the long term to build wealth. Why would you want to invest in bonds when you could invest into companies like Coca-Cola and DaVita, which are going to give you stable growth over the long term, really regardless of the overall economy and what other companies are doing? If you're not familiar with this company, DaVita provides kidney care and dialysis treatments for patients with kidney disease. Now, kidney disease is actually on the rise, and it's anticipated to increase over the next decade, which is going to give more business for this particular company. And the reason chronic kidney disease is on the rise is due to America's obesity epidemic and how it's getting even worse. This means DaVita's treatments are likely to increase, and if you give money to this company, they are going to use your money to help develop treatments for people with this chronic disease. So not only are you helping out your fellow man, and you're giving a company money to invest into treatments that help other people, but it's also going to give you stable returns, plus this company is backed by Warren Buffett. The last company we have on this list is a company that I personally am not very bullish on. However, I will still mention it in this video because a lot of people tend to have different investing strategies and different risk tolerances than myself, so I at least want to make you aware of this company, and that is Chevron, ticker symbol CVX. This company basically specializes in fossil fuels, and their current share price trades for $162 per share, while experts in the field believe this company should be worth anywhere between $145 and $210 at maximum. Chevron, ticker symbol CVX, has become somewhat a stock of controversy as the United States tends to pull away from traditional fueling sources such as fossil fuels, oil and gas companies, and toward alternative energy or renewable energy sources. However, with that being said, fossil fuels aren't going anywhere anytime soon. The United States cannot just forsake all the oil and natural gas resources we have and then all of a sudden become completely sustainable and renewable overnight. It's going to take decades for this to actually happen over the long term, and until that happens, we still need to be aware of various fossil fuel stocks. However, because I'm a very long-term investor, I anticipate that the long term for this company may be put in jeopardy due to other sustainable energy sources and renewable energy companies that are on the stock market right now. But with that being said, it does offer their investors a pretty strong dividend yield of 3.55%, and it has been a long-time favorite of Warren Buffett and Berkshire Hathaway. But with that being said, I would love to hear your thoughts down below on your favorite company on this list. Subscribe for more videos just like this one. Smash that like button if you haven't already, and I will see you in the next YT video.